Attention! This video is intended for the purpose of educating and understanding the forex market. It is not created to induce investment. Investment is risky. Therefore, investors should study the information before making an investment decision. Hello everyone! Welcome to the first chapter of Basic Knowledge in Forex. Forex is the combination of foreign currency and exchange. Foreign exchange is the process of changing one currency into another currency for a variety of reasons. And this will lead you to know more about what Forex is. Are you ready? So let's go! What we are going to learn here, we will divide it into 6 topics. We start by talking about what is Forex and then jump into the topics of how does Forex make profit. Then Forex market structure. Move on to the part of Forex market moments, specific in Forex market highlights, and then we move on to the part of how to choose a good broker. Let's get started with the first part about what Forex is. Forex stands for Foreign Exchange Market, which is open 24 hours a day. Forex is the largest financial market in the world as the volumes of coins traded in order to speculate on the currencies, including import and export, that exist around the world in excess of 5 trillion per day. Now, let's see how that the Forex makes profit. Forex is an online financial market that allows investors to speculate on the currency through the purchase and sale of the currency pairs such as Euro versus United States dollar, Australian dollars versus US dollar, or US dollars versus Japan yen. In order to benefit when investor to buy and sell speculative at the right time. This is similar to other types of investments such as cryptocurrencies, stocks, or funds, which use the principle of buy at the low price and then sell at a high price. If those who have entered the forex market already have an investment background, it is not difficult and not difficult for beginners who want to try investing in the forex markets as well. For example, if we buy an Australian dollar versus US dollar currency at 2.5, it means that we take 2.5 USD to buy 1 Australian dollar. Remember that the front currency is always 1. Later, if the Australian dollars versus US dollars exchange rate changes to 2.9, then if we exchange the money, it will result in a profit of 0.4, which is counting from 2.5 to 2.9 in difference. The forex market can be profitable for investors both during the upturns and downturns. What we're going to learn here about the specific terms in long or buy and short or sells. But let's get started with the first one. Long or buy orders means here. The investor orders the currency in order to wait for the price of the currency to rise, where the investor chooses a long or buy order. For example, the investor will buy the currency Australian dollar versus US dollar because he believes that in the future, the Australian dollar will strengthen against the US dollar. The second terms about short or sells orders means here. The investor sells the currency to wait to be bought back at the time when the price of the currency is lower, where the investor chooses a short or sell order. The investor will sell the Australian dollar versus US dollar currency only if they believe that in the future, the Australian dollar will weaken against the US dollar. We can summarize as investors buy the currency only if they see the markets at an uptrend period. This makes the currency more likely to strengthen, and investors will sell the currency seeing as the markets in a downtrend, the currency may weaken. Now let's move on to the part of forex market structure. The forex market is a large financial market with a large number of market elements. From the picture, the central market plays a role in buying and selling currencies. The central market forex is the online middle market by using the internet system in communication, as well as can be traded everywhere within the periods of the market opening, which is made by sending order electronically. This system is called the interbank market system, which brokers are intermediaries to send orders and trades from investors to the central market. Let's talk about the forex market movements. Forex market is a non-central market called over-the-counter or OTC, which is called a market where investors trade a lot. It is a market that speculates on currency between two currencies, such as euro versus US dollar, Australian dollar versus US dollar, where investors can buy or sell currency 24 hours a day for 5 business days from Monday to Fridays, just like our service from NewWinFX, which is offered 24 hours per 7 days as its investor buying or selling in cryptocurrencies. Let's move on to the Forex market highlights. Forex trading is a speculation from the currencies of different currencies that the currency will go up or down. This allows investors to make profits, whether the currency has decreased or the value of the money has increased. We don't have to worry about the spinning or smashing price from major investors because currency is a big economic at the national level. No one can easily smash everyone's currency because the currency traded in the forex markets is highly stable, such as euro, United States dollar, Japan yen, Swiss francs, as well as gold trading, silver, or cryptocurrency such as Bitcoin. The forex market has a system for investors to try trading with trust funds. Everything is realistic, trading according to real market conditions. You can try it out until you have the expertise to analyze it accurately and then start investing. Now we are jumping to the last topic about how to choose a good broker. When thinking about choosing a good broker, you have to consider about these under topics down here. The first one is about the license registrations. At least choose regulated by this full company. For example, FCA, ASIC, CISEC, or IFSC. A good broker should be as an A-book. What that means? An A-book broker sends order and sales of clients directly to interbanks or leading financial institutions just like NewWinFX. It's 100% STP booklet. Directly trades order to Tier 1 bank. No worry about stop-loss hunter when trading with NewWinFX. Trading platforms. Trading platforms, it's about the broker trading programs must not contain records. A record in the forex world means that the broker you are dealing with is not able or willing to give you a trade based upon the price you enter. Generally, this happens in the fast-moving market, usually around the time of a big news announcement or some kind of shock to the system. Spreads. Spreads must choose a broker that does not increase spreads during fluctuating markets. Deposit withdrawal channels. There is a deposit withdrawal method via Thai Bank. The withdrawal should not exceed 24 hours. Modernity in buying and selling, and diversity of products that investors are able to choose to invest. Support required. Support to resolve problems in time. And all those you can have here in our service and products in trading with NewWinFX. Contact for more at newwinfx.com or just scan our QR code just right in front of you. We are ready to help you and assist you anytime.